In this video, you are going to learn everything you need to know about the supply and demand trading strategy so that you can become a consistently profitable trader. This is the exact trading strategy that we use in the Moneyball trading program and that I've been using for over 8 years and helping traders create money consistently by day trading. This will work for swing trading, day trading, scalping, all different time frames, all different markets. Doesn't matter if you're doing stocks, futures, options, forex, it's all the same top-down analysis, and we're going to break through everything. Okay, so there is a lot that we are going to talk about. You are in the right place. Doing this now for a living, traveling around the world, helping traders make money consistently, and I'm here to bring you through the whole trading strategy. And if you guys have questions, please let me know in the comments below, or you can always reach out to me on social media at Moneyball Austin. Facebook, Twitter, Instagram. I appreciate if you guys like the video, subscribe, and we are going to dive straight into this. Let me grab a cold one. Let's crack a beer. There's a lot to go over, so I do get thirsty. So give me 1 second. What I am going to be having here today with this lovely course video is just a nice Michelado Ultra Hard Seltzer. I know last year, especially over the last year, I've been kind of into the wine since being in South America. But I like my beer. But right now, I'm kind of into the seltzers right now. I'm usually not a fan of it, but it is a hard seltzer by Ultra, mango flavored. Fantastic. So, hey, if you're cracking a cold one with me, if you're not, that's all great. Let's cheers and let's get into this, all right? The topics we will be covering here. There's a lot. Let me break it down. We are going to be talking about what is the best trading strategy out there. What is supply and demand and the theory behind it? How do we identify and draw out supply and demand zones? How to determine high quality supply and demand zones? What is confirmation and why is it so important? My exact top-down analysis using the multiple time frame sequence setup, the one time frame setup that we will also touch on, and how to take profit entries, stop loss, trade management, risk management, talking about news, fundamentals, trade reviews, indicators, technical analysis, journaling, trading psychology. I don't want to have to break this into 30 videos and get you clicking on each individual video. It's nice when you have one video that tells you everything that you need to know. But if I go into something, I might say, hey guys, I did make a video on this. And if you want to learn more about it in depth in like a 15 or 20-minute video, check out this. I will have it on the screen, but I will have everything in the description below. Okay? So what is the best trading strategy? That's a very good question. I get people asking me this all the time. What is the best trading strategy? I want the best time frame. Okay, let me break it down to you. Let me give it to you straight. Okay? There is no best trading strategy. There are many different trading strategies out there. In fact, let me go to this little ebook here. The first thing that you need to understand that there are many different trading strategies. Anyone who tells you this is the best trading strategy is lying to you, and you should avoid them at all costs. Okay? Because there is no best trading strategy. There's so many different out there that you need to find one that makes sense to you. There are trading strategies out there that I don't understand still, and I've been doing this for over 8 years, and I still don't even understand really what they're doing. Okay, so it's important that you find one trading strategy and master it, and then potentially look into other ways of trading. Okay, but hey, I've been doing well with this for 8 years, so I don't really leave my pen of this trading strategy. I consider what other people are looking at, right? What trading strategies they're looking at, where they're probably buying and selling at, but I'm not going off and learning all these 20 different trading strategies. Find one that you like, that makes sense, and master it. And that's what we're here to do, okay? So what is supply and demand, and what is the theory behind it? That's a fantastic thing. And you know what? We got to reverse engineer everything. And I want to quickly say, if a UFO came crashing down in the desert and the government goes and captures it, they don't just put it in storage, okay? If it's a technology from out of this world, out of this planet, they put it in a facility and they research it and they do a reverse engineering on the technology and how it works. And do they have that technology currently here? How is it being used? How can they break it down and potentially replicate the same thing? Okay, it's the same thing if they find like a weapon in like World War I or World War II. If they found a certain weapon that they haven't seen before, they're trying to figure out, and they capture it, they're trying to figure out what are the components of the weapon, how is it made, how does it function, why is each individual piece important, why does it play a role, right? So we have to reverse engineer the whole trading strategy and understand what you are doing in the market. What are zones? Why is it important that we're drawing out zones? How do we determine trend? Why is it important that we determine trend? What's a good zone? What's a bad zone? Why are my winning trade setups have all this in common while my losing trade setups don't have this in common? Okay, how to create a profitable trading strategy. All right, a plan, a trading plan. These are all things that you need to understand. You can't just watch a 10-minute video and expect to be a pro. Okay, so we have to understand, we have to reverse engineer this. Okay, this is like an hour and a half, hour and 45 long minute video, but this is going to answer a lot of your questions. What is supply and demand, and what is the theory behind it? Great question. Great question. Well, as you know, supply and demand has been used for thousands and thousands of years. But when it comes to the markets, we understand that the big banks and institutions are running the show. Okay, they equal to be maybe about 95% of the liquidity into the markets. So if these guys, the big banks and institutions, are the ones that are making all the money, don't you think it's a wise idea at knowing where they are potentially buying or selling at on the chart? Yes, we understand that retail traders typically lose money because they don't have a stop loss, they risk too much. That's mainly their main reason. But these big banks and institutions are making money consistently. Okay, so we need to be aware of where they are buying and selling at on a chart. And what we're trying to do as supply and demand traders, because the big money is the ones that are making all the money, we want to be able to identify where they're buying and selling at and trade with them once prices return back into these areas where they previously saw value at. Now, luckily, they leave something on the markets, we call them footprints. Okay, they leave footprints on the charts of where they are buying and selling at. So if we scroll in here on Euro USD, this gigantic move to the upside is a lot of buying coming into the market. This is not retail money coming into the market. This is a daily time frame. This is billions and billions of dollars making this gigantic move to the upside on the daily time frame. Okay, so clearly a lot of money stepped in from the original place, which is right here, from down here. All right, that's where a lot of buyers stepped in. Same thing for selling. What we're trying to do as supply and demand traders is we're trying to identify where the big money is buying and selling at, and then trade with them once price returns back into these areas of interest, which we call supply and demand zones. Now, what are the 4 supply and demand zones that we need to be able to identify and draw out? That's a fantastic question. Let me pop up here on my screen. So what you see right here are the 4 patterns. They have to be this, okay? You have the 2 supply zones. You have where prices rally, bases, drops, and then you have a drop, base, drop. Those are our 2 supply zones. And then for our 2 demand zones, we have prices drop, base, rally, and then we got the rally, base, rally. Okay, I have them circled here. Let me quickly delete everything. And those are our 4 supply and demand patterns. We have prices rallying up, base, drop, drop, base, drop, drop, base, rally, and a rally, base, rally. 2 are continuation patterns and 2 are known as reversal patterns. Okay, now every zone has something in common and they all have a base. Okay, every pattern has a base to each zone. All right, that's what we are trying to circle out here on the chart. But you'll also notice that every candlestick, every pattern has a strong imbalance. We're going to break down the components of each zone, but everything has a strong imbalance to the downside or to the upside. Now, what the base has in common is they typically have 50% candlesticks. What 50% candlesticks are when the total movement from, say, wick to wick is less than 50% of the total move. Okay? The total move from the open to the close is less than 50%. And those basing candlesticks are known as typically 50% candlesticks. Okay, that's when prices go sideways. Imbalance candlesticks, these gigantic moves that you see here to the downside, big move to the downside, big rally to the upside, big rally to the upside, those are known as imbalance candlesticks. Those are known as non 50% candlesticks. All right. And the whole concept of supply and demand is to identify where these big moves are happening in the market. So this is where you don't have, say, the total movement from wick to wick is less than 50%. You have a strong imbalance candlestick. All right. That's what we want to see when it comes to identifying and drawing out our supply and demand zones. We want to look for very strong imbalances in the market because that's where the most amount of buyers or sellers stepped into the market. And then once price returns back into these areas, we then want to look for buying or selling opportunity. So if we go to a chart and look at this, we always have to, we'll stick with this one, Euro USD. We have many to go over. We look at Euro USD. First thing we need to do on any chart, doesn't matter if you're swing trading, day trading, scalping, looking at different markets or sectors, forex, futures, whatever. The first thing that we do is we need to identify where the big money is buying and selling at. Okay, so we always start with current price and we go down and to the left. All right, that's where our demand zones are going to be. And in this case, we have a demand zone right here. Notice how these candlesticks going sideways are typically 50% candlesticks. Like I said, the base is typically 50% candlesticks. And the imbalance candlestick, look how big that move is. That's where your eyes want to go. Your eyes don't want to go to anything grinding up or grinding down. We want to see big, big, big moves to the upside. I used to call them boner candles. If you want to call them giant boner candles, by all means, go for it, right? You know, if you're about to hit it, you know, you want to rock hard, you know what I'm saying, right? You want it there, but you don't want to seem too excited, right? So, okay, I'll stop it right there. I won't go any further, but you know what I'm saying. Our eyes want to go to something like this where it has a gigantic move to the upside or a gigantic move to the downside. That's letting us know a lot of buyers or sellers stepped into the market, okay? And so when it comes to drawing out our proximal line and distal line, we're trying to highlight the base of the move. In this case, we have this base right here where it goes sideways, okay? Notice how I'm drawing out these zones. I'm not drawing it out like this. I'm not drawing it out like this. I'm drawing it out like this, taking the meat of the base orders, but close enough to where the imbalance started from, okay? So if we go back to this book, this is a book for you guys. But notice here how I'm drawing out these zones, okay? My proximal line is going across. Let me draw this out. My proximal line is coming across like this. My distal line is highlighting the base. But every zone has a strong imbalance to the downside or to the upside, okay? That's what we want, and we're trying to highlight the base of the zone, okay? So what you see right here is proximal line and distal line. We're trying to draw out the general area of where the big buyers or sellers stepped into the market, okay? So that's how we're going to draw out our zones. So we got a very strong move to the upside, we got a demand zone down here, and then we got a supply zone up there, okay? We have many different zones. Like we could go down to we could switch up the market. Let's go to silver and do the same thing. So we start on the daily time frame, in this case on silver. First thing that we need to do is draw out our areas of supply and demand, okay? So we have demand down here to the left, and we have demand down here to the left. And supply, I don't really see any good supply, but for, you know, practice purposes, we are going to go down to a 4-hour time frame because maybe some people want to use the 4-hour time frame. In this case, if you're going to be drawing out supply and demand zones, this is your zone right here, okay? That's your little supply zone. Base going sideways, look at the strong imbalance to the downside, all right? That's the zone that we want to be having marked out on our charts and be looking for buys or sells if prices return back into that area. Notice how I'm not drawing out these areas, okay? Those areas are very poor. What's the difference? What do you notice the difference between, say, you know, this candlestick, this supply zone that we drew out here versus, this area or this area. Do you notice any main difference? Look at the imbalance, right? So what we don't just go off on a chart and draw out every single zone. We want to make sure that these zones actually accomplish something and either remove an opposing zone or break trend lines. We're going to talk more about that later, but we want price to actually accomplish something on these leg outs. And the first thing what we need prices to do is we need prices to go at least 2 to 1. 2 to 1 the size of the base. So in this case, our base is 300 points. The imbalance candlesticks that went about a total of 750 points is over 2 to 1. All right, that lets me know that a strong enough amount of sellers stepped into the market, and it's a tradable zone as well. It actually also removed an opposing demand zone and created new lows. So what I always look for, and this is something you guys should write down, is 2 to 1 imbalance, and does it opposing zone or break momentum line? This is called a tradable zone. I've done videos on this in the past. I didn't mention it, but I have a tips playlist on my YouTube channel that breaks down everything. So if you go to my YouTube channel, thank you guys for 20,000 subscribers, much appreciated by that. But you go to playlist right here, and it's the tips playlist. This is breaking down my entire supply and demand trading strategy, breaking each individual, how should I say, each individual lesson down, top-down analysis, stop loss, take profits. That's a playlist that I really do recommend checking out if you want to learn more, how to properly identify and draw zones. It's really good stuff. And so I will have that in the description as well. Okay, so when we go here to supply, we got this gigantic move to the downside. That's something I like. That's going to be our supply zone right there. I'm not interested in drawing that out or that out. Okay, so now we got to go down to demand, and we got some type of demand down in here. Okay, this is going to remain as our daily demand, but it's also 4-hour demand as well. Okay, so that's the first thing that we need to do, is determine where our higher time frame supply and demand zones are. Okay, I mean, we could do one more example. The first thing that we do on a chart, we go to a brand new chart. We've got to draw out our supply and demand zones. All right, we have a demand zone right here, proximal line, distal line, and we have a supply zone up here, proximal line and distal line. Notice how every imbalance, 2 to 1 imbalance, removed an opposing zone or broke momentum line. Okay, same thing with this demand zone. Very strong move to the upside, removed this opposing supply zone. 2 to 1 imbalance, removed an opposing zone. It's a tradable demand zone. That's a demand zone that I would keep on my charts, that I wouldn't necessarily just buy straight up. But once prices return back into these areas, I will then consider looking for buys or selling opportunities. Okay, so let me go back over here. How to identify and draw out supply and demand zones. We talked about that. We have the 4 patterns of supply and demand, right? How to determine high quality supply and demand zones. All right, we did quickly talk about it, but we are going to talk about it in our top-down analysis. But ideally, what you really want is you want prices removing these opposing zones and breaking momentum lines with strong 2 to 1 imbalances. Let me show you one more. So in this case here, we have a supply zone right here. We draw, look guys, proximal line across, distal line above, proximal line across, distal line above. Here, proximal line across, distal line below. Okay, those are our supply and demand zones. But notice how every zone has a 2 to 1 imbalance and or removes an opposing zone or breaks momentum line. Okay, this is 100% required for any zone that you have on your chart. If it does not go 2 to 1, the size of the base within the first 1 to 3 candlesticks, you will never see me drawing out a zone. You will never see me drawing out a zone that has less than a 2 to 1 imbalance. Okay, and then we need to make sure that prices remove opposing zone or breaks momentum lines. That makes it a tradable supplier demand zone. It's important that we have these criteria because statistically they work a lot better. This has been heavily reviewed by myself and many other traders when we do our review. Okay, so I recommend 2 to 1 imbalances, removing opposing zones and breaking momentum lines, right? Okay, so we did talk about how to identify and draw out supply and demand zones, how to determine a high quality zone. We're going to talk more about that in not lesson 3, but later on in this video. Now let's talk about what is confirmation and why is it so important, because this is a very important concept that people need to understand about how trend turns from inside out. Okay, how trend turns inside out. You guys know the saying, the trend is your friend until the bend at the end, right? So it's important that we need to know how to determine when the market is bending, right? And it's very simple. We're going to look at a couple examples. Let's look at is UK 100 and how prices are going to turn. It turns from inside out. Okay, so when prices come into our higher time frame supply or demand zones, let me go like this. We have higher time frame supply up here, higher time frame demand down here. So we have supply up here, we have demand down here. If prices are coming down into say a higher time frame demand zone, say a daily demand, let's just call it a daily demand. If prices are coming into a daily demand zone, what's the trend going to be on the 30-minute time frame? What is the trend going to be on a 30-minute time frame? It's going to be down. You understand that, right? Because you have price coming into a higher time frame demand zone. So that means price on smaller time frames have to be going down, right? So it's like here on silver, it's a very easy concept to understand. Like here, we had this daily demand zone, right? Prices were coming down on the daily time frame. We only had like 3-4 daily red candlesticks to the downside on the daily time frame. But if we go down to a 30-minute, all right, that's what the trend looks like on a 30-minute time frame going into our zone. That's clearly down. You can't sit here and say the 30 minutes in an uptrend. That's definitely in a downtrend, right? But that's what we want. We want prices to come into our higher time frame supply or demand zones because it's a larger force. And this is usually where I start talking about Newton's law of motion and stuff like that. Because how I explain this is if you need to understand how Newton's law of motion is like an object in motion will stay in motion until an opposing larger force comes against it, right? And so one of the things I say is, say, for example, we are here at the top of the hill and down here at the top of the hill, we're up there, we have a tennis ball, right? And we let go of that tennis ball. That tennis ball is going to fall and continue all the way down through the hill and eventually maybe run out of speed because of gravity, right? But if we put, say, tennis ball down there at the bottom of the hill and that tennis ball comes down and hits that tennis ball, do you think that that tennis ball is going to stop price in its tracks right there? Is it a larger opposing force? No. It's the same object, right? It's the same force. But this ball that we're dropping here has momentum. So it's going to blow through that tennis ball and continue down. That's equivalent to saying, say we're in a 1 hour uptrend coming up against a 1 hour supply zone. I don't expect a 1 hour supply zone to stop price from turning. I might see a little small correction, but then continue to the upside, right? That small correction is that ball bouncing back a little and then continuing through. The only thing that will stop, this trend from going in an uptrend is a larger force. So if we have, I don't know, a door, let's just put a door down there, like somebody's ringing your doorbell and you open up your door, hello, right? Anybody there? You have your door down there. That tennis ball that you are dropping is going up against a larger force, okay? And so when you drop that tennis ball, do you think that tennis ball is going to blow through that door, or is it going to come to a complete stop? It's going to come to a complete stop, right? Because it's a larger force, all right? And that's what we're trying to do. This is why it's important that we identify where the big money is buying and selling at, right? Drawing out our supply and demand zones, and then we wait for prices to come back into our zones. Okay, we don't just buy or sell straight up. but we understand that's what we need, okay? So the trend is your friend, yes, until the bend at the end. And how prices are going to start to bend. What was that example I was looking at? UK 100? I think a 4-hour time frame. So on the weekly, we'll look at the weekly. This is really good stuff, guys. So if we look at the weekly, we had a weekly supply zone up here to the left, okay? You understand that, right? We have this weekly rally-based drop supply zone. Look, guys, very strong and balanced to the downside, removed an opposing demand zone, so it's a tradable higher time frame supply zone, right? So when prices come back up into this area of supply, I don't just sell straight up, because when previous price was up there, it had a strong sell-off. I can then go down to a smaller time frame and wait for confirmation. Wait for the trend to bend at the end, right? The trend is your friend until the bend at the end. Wait for that bend to happen. So this is where I started saying on the 4-hour time frame, what is the trend going to be on a 4-hour time frame with price coming back into a higher time frame weekly supply? That's what the trend is. It's going up. It's going higher highs and higher lows, just like the other one that we used when it was coming into demand. It was in a downtrend, right? But we're coming into a higher opposing force here. That's what we want. People might think you're crazy for looking for selling opportunities at this point, but we understand where the big money is buying and selling at. And so price previously sold off from there. So when price returns, we want to be looking for selling opportunities. And how price is going to turn from inside out. You're going to see the bend happening, okay? And this is how prices have to turn, all right? So we had this uptrend at some point, higher highs and higher lows, right? You can see right here, higher highs, higher lows, higher highs, higher lows, until the bend happens, all right? The bend is confirmation. Price turns from inside out. So before we get a 4-hour turn, we're going to get the 1-hour turning. Before we get the 1-hour turning, we have to see the 30-minute or the 15-minute. Before we see the 30-minute turning, we have to see the 1-minute turning. Prices turn from inside out. So here on the 4-hour, we were trending up like this, and then we go sideways and then down, right? That's price turning from inside out. And what we're trying to do when it comes for confirmation is we're trying to spot this time of when it starts to turn, okay? So price comes, say that's our demand zone right here, price coming into it, and price goes like this, okay? This confirmation, what we are looking for is this right here. We are looking for the trend lines to be broken and removing opposing supply zones. Remember, we don't remove supply zones in a downtrend. We create supply zones in a downtrend. So when I start seeing this happening right here on my chart, I start removing opposing pivot point supply zones and breaking those trend lines. That's an indication to me that the sellers are now being removed and the buyers are starting to step in on the smaller time frames, right? The first sign is breaking momentum lines and removing opposing zones is the second thing. Those are the two things, right? That's going to be the evidence of confirmation that we might start seeing buyers or sellers stepping in. Now, we don't just say, just because we see a momentum break and opposing zone being removed, doesn't mean we just go off and start buying. No, I see people do that and they're like, well, how's that typical momentum break in that opposing zone that you remove? No, okay? We need to make sure it's a quality confirmation. And we're going to talk more about this in the top-down analysis, but that's what we need to see happening. We need to see the momentum breaks and the opposing zones being removed, okay? That's price starting to turn from inside out, okay? The trend is your friend until the bend at the end, right? This is how prices have to turn. And so at this case, we were going up, higher highs and higher lows, and then we started breaking those trend lines, right? Going sideways, maybe then short term, we eventually maybe continue that trend to the upside and then go sideways again, and now we start going down, all right? This is how prices have to turn. And so if we look here on the ebook, this is one of the ebooks I give completely for free for you guys for going through the masterclass at moneyballtrading.com, I send you this. It will probably be updated in the first month of 2024. But here, I just talked about here Newton's law of motion, understanding how trends turn from inside out here in the ebook. And then I go here, a trend will continue at your current direction until the bend at the end. This is when prices reaches an opposing larger time frame zone. So it is for this reason, it is critical that we know where price is on the higher time frame before we just go ahead and follow any trend. All right, we just don't follow the trend blindly. This is why we start off on our higher time frame and we draw out our supply and demand zones, because we need to be aware of where price is on the higher time frame here. Okay, so we are talking about what is confirmation and why is it so important. Here it is. My exact top-down analysis using multiple time frame and the one time frame setup. We're getting to the good stuff right now. This is the solid stuff. This is what everybody wants to know. I just want to know your top-down analysis so I can implement it, right? Okay, that's what we're going to talk about. But it's important that you understand that. How do we identify zones? How do we draw zones? What makes a tradable zone? Why is it important that we determine what the trend is? Understanding that trend turns from inside out, right, ladies and gentlemen? Yes. So now you understand the components of why we are doing what we are doing. All right, it is important. My exact top-down analysis. Okay, the first thing that I do on my chart. So when it comes to our top-down analysis, what we need to do when we first come to a chart, guys, doesn't matter. I will actually show you guys the time frame sequences that I do recommend. And that's going to be, because I know you guys are always asking me, what time frame sequences? Time frame sequences. Let me look here on the Discord. Time frame sequences. It's a photo that I'm going to show. I've shown it in the past. But these are different time frame sequences that I recommend trading when it comes to the multiple time frame sequence. There's long-term position trading, and if you're interested in holding trades for a long period of time, maybe you want to draw out and start on the monthly time frame, and the daily will be your entry. Maybe you want to do swing trading, you start with the weekly, and maybe you want to use the 4-hour or 2-hour as your entry time frame. Those are your confirmation trend turning from inside out time frames, right? Or maybe you want to use the daily 1 hour or 30-minute. Okay, or for daily income, you want to use like a 4-hour as your highest time frame and the 15 or 5-minute as your confirmation lower time frame. And for your scalping, maybe you want to use the 1 hour and 1 minute. You can use the 30-minute or 15-minute as well as your highest time frame. It's just more aggressive. You can do that. But those are the time frame sequences, and we'll talk more about that later. First thing we do when we come to a chart, guys, we need to identify where our higher time frame supply and demand zones are. Where are they? If you had to do this, where are they? Okay, do this with me. This is a good exercise. Where are our demand zones and supply zones? So our demand zone is here, and our supply zone is up here. Okay, those are our current, fresh, higher time frame 4-hour supply and demand zone. Okay, once again, they're tradable. Right? Very strong moves to the downside or to the upside that went over 2 to 1 the size of the base. And these imbalanced candlesticks are also, they removed opposing supply zones. So that imbalanced candlestick to the upside, those 3 candlesticks remove supply and supply here. Okay? So they are tradable higher time frame supply and demand zones. We would not use this as a higher time frame supply zone. Why? Why? Remember, 1, no 2 to 1 imbalance, price never removed an opposing demand zone or broke momentum line. So we can't use this as a supply zone. Maybe, I still wouldn't even use it because that imbalance is horrible, right? It's like a 50% candlestick. So that's not something I want as an imbalance. I want strong imbalances. So what I want is when prices return back into my higher time frame zone, that's when I'll start looking for buying opportunities. Or if prices come back up here to supply, I will start looking for selling opportunities. Okay? Because price is currently outside of it, this is probably something I wouldn't even have on my watch list. But what you want to see is we go down to our, say, lower time frame. Let's just use this as a 15-minute, just imagine. And we want to see prices making these lower lows, lower highs, right? And what we want to see is the confirmation, all right? The break in downward momentum, opposing zones being removed. That's what I want to see here, okay? And ideally, what we're trying to do here is, as long as this is a quality zone, we would trade the pullback back into this newly formed lower time frame zone. Okay, that is the multiple time frame setup, and we're going to look at live examples and trade reviews. But that is ideally what we are looking for. We want price inside our higher time frame tradable supplier demand zone. And then once prices are inside our higher time frame tradable supplier demand zone, we want to then go down to a lower time frame and wait for confirmation. Okay, so the trend is kind of sideways here on this market. So that's totally fine. That's cool with me. Trend is sideways, not inside higher time frame. So we can't go any further. Let's look at an example of a current zone. USD Singapore was one that we have on my watch list, I believe. Let me look at this. Austin's watch list. Yeah, USD Singapore mentioned above. I was posting that saying, we talked about it in our Sunday meeting and stuff like that. But let me give you the breakdown. The first thing we do, daily time frame, we draw out our higher time frame supply and demand zones. So in this case, we have our daily supply zone right here. Okay, we have a daily base drop supply. And when prices come back up into it, we start looking for selling opportunities. So we went down to our 1 hour time frame in this case, and this is what prices looked like when it came back into our zone. Okay, what are we looking for? We need prices to sell off. Okay, we don't get that, we don't get that, we don't get that, we still don't get that. Do we get it? Do we get it? Boom! Do we get it now, guys? Do we get it now? We have got it now, right? Come on, give me a cheers to that one, right? Cheers. All right, this is great. Half the work is done now. You can't cheers and not drink, right? I hate when people do that. You ever go out with people and you cheers them and they don't drink after that? Oh, you always got to have a swig, you know? So this was the setup. And so we had our upward trend line like that, connecting it to the higher high pivot points. We had a strong sell-off that removed, let me scroll in so you guys can see. We had a sell-off that removed this whole area and this whole area of demand, okay? So we have that, what you see over here, where I am always drawing this, guys, okay? Drawing that, and then we are breaking our upward momentum line like that, right? So we have created that supply zone. Great, that's the sell-off. Now we need to make sure it's a qualified zone. Just because it, broke the momentum line or removed the opposing zone doesn't mean we just trade it straight up. We don't do that. Okay, there's certain things that we need to do. Now, I'm not going to get into every core material, but I want to give you the top 3 to 4. Okay, and number 1, let me draw it out so you guys can properly see it. That's the demand, that's the supply zone, right? We draw our proximal lines up there, proximal line highlighting the base, and the distal line above there. We're going to talk about take profits in that soon. We have our proximal line, distal line, the imbalanced candlesticks. Strong 2-to-1 move within the first 3 candlesticks. So the total pips, the whole points, 8 points, the size of the base, and it moved within the first 3 or 4 candlesticks. It went over 34. Okay, so it went like 3 or 4 times the size of the base within the first 3 candlesticks. That was very important what I just said. It also removed an opposing demand zone and broke momentum lines within the first 3 to 4 candlesticks. It didn't take 10 candlesticks. It didn't take, 20 candlesticks. It took 3, maybe 4 candlesticks in order to actually show confirmation. Remember, if there is a significant amount of buyers or sellers, guys, do you think the market is going to move in a very strong fashion or non-strong fashion? I don't know where I was going with that. It's going to move in a very strong fashion if there's a significant amount of buyers or sellers, right? In this case, sellers. If there's a lot of sellers coming into the market, it's going to move quickly. We had an over 2-to-1 imbalance within the first 3 candlesticks. We also removed two opposing demand zones, pivot points, and we broke the upward momentum line. That's what I want to see. So now I'm thinking, okay, maybe I set my alert, maybe I put on a pending order. It's optional. I personally would rather set an alert because I don't want 20 pending orders if I'm looking at so many different markets. So I would rather set an alert, but everybody's different. Okay, prices then eventually came back up, okay, and it would have just missed us based off of, where I would be entering the trade, because you would be entering the trade. This is where people say, okay, well, where are you entering? Where are you putting your stop? Where are you getting out of the trade? Perfect example. I'm about to rock your world. When prices came back up, this is ideally where we would want to be getting filled when prices return right here. Now, I probably would have not gotten filled here. All right, because my entry is going to be at the proximal line when prices return. So I would have just missed my entry, okay? But prices did just miss it, drop, quite far all the way. It dropped all the way down and then up. So it's probably not something that I would re-enter in after it came so close. But let's just imagine I did, okay? We get into our trade. Where am I going to get out of my take profits? When it comes to take profit, entries, stop loss, and whatever, those 3 things, when people reach out to me and they're like, oh, prices just stop me out and then reverse and hit my take profit. Prices just missed my entry, go and hit my take profit without me. Prices just missed my take profit and then reverses and stops me out, right? Dude, people tell me that all the time. The thing is, it's 99% of the time, it's not that case, okay? What is happening? If that is the case, it's the easiest fix in the world. If you notice price is just stopping you out by 1 or 2 pips, what do you think the logical thing is to do? If you notice price keeps stopping you out by 1 or 2 pips, then reversing, what's the logical thing, guys? It's not, it's not hard. It's common sense. You would move your stop loss above, an extra 1 or 2 pips. If you keep getting missed for your entry and then price goes and hits your take profit, then move your entry closer. Right? If you keep missing your take profit by 1 or 2 points, then get out sooner. It's common sense, but it's not the reason why people are making money or not making money. All right, it's delusional. If that's the case, like I said, you just adjust it. It's that simple. Okay. What I recommend is, you could go structure stop loss, or you could go. What I talk about is go 50% the size of the zone. So if that's our zone. When it comes to stop loss, very easy. If it's a total of 10 points, what I might do is just place a stop loss above 5 points. And so I'll place it right there, and that will be my stop loss location, half the size of the zone. Some people might want to go more of a structure. Sometimes I'll use that, and sometimes I use structure. It depends on, if they're structured to the left. So I would probably just keep it right around there, and I would have it right above my higher time frame supply zone. So I would just keep it right there, to be honest, right? But if there's a clear pivot point or structure right above or below it, then I would probably want to have it right above it, okay? But there is fine. But what I wouldn't do is I wouldn't have my stop loss right there. I think that's really bad to do, okay? So instead I would have it up there, okay? So when it comes to your take profit, same thing. What I recommend early on is making your trading very mechanical, as that will help you eliminate the side of emotions when it comes to trading. Because if you're going to, what I recommend is just, when it comes to take profit, is get out at very easily a 1-to-1, a 1.5-to-1, or a 2-to-1 early on. Most people can't manage, and most people can't handle saying, I want to go for 5-to-1 and have a 75% win rate. Truth is, bro, I'm being honest with you guys. That's not going to happen. You're not going to have a 75% win rate and hit 5-to-1 trades. It's not going to happen. Okay? I don't know a single trader that does that. And don't say, oh, I know this trader. Look at this. It's like I'm jerking off 2 dudes at once. Like jerking 2 dudes off. How do I do that? That's cool. You guys know what I'm saying with this. So I forgot I lost my train of thought there, not going to lie. So when it comes to these take profits, okay, like I said, get out at a 1.5, 2-to-1 consistently, okay? But this is why you journal your trade. This is why you journal your trade, and then you can review to see what makes the most sense, all right? Most people can't handle a 20 or 30% win-loss record. You understand, like you do understand here for a second, that if you get filled in this, let's say you get filled and prices drop and you get out at say 2 to 1 here. If you instead asked for a 4 to 1 down here, and that's where you want your take profit, you are going to have a smaller win-loss percentage than the trader that gets out at 2 to 1. Okay, you understand that. Yes, you might potentially make more money, but can you handle that psychologically? So this is why I recommend making your trading very mechanical as you can, as it will help eliminate your chance of making an emotional decision. You can't move your take profit. You don't move your stop loss. All right, unless you have a very rules-based reason. You only move your stop loss to break even after prices go 1.5 or 2 to 1. Okay, if you want to take multiple take profits, maybe you go in half of your position right here, right? You get into your position and then you take half out at 2 to 1. You move your stop to break even after your first take profit is hit, and then you let your second take profit go to 4 to 1 or 5 to 1, or you have it just like at 20 to 1. Okay, maybe that's what you do. Maybe you have a trailing stop that once it's 20 points in your favor, you move it down every 20 points. Maybe that's what you do. Maybe you go all in, all out at 2 to 1 or 1.5 to 1 or 3 to 1. All right. What is important is that you are consistent with that approach. What is important that is you are consistent with that approach and that you journal your trade. You journal your trade. Because how do you expect to know what works and what doesn't if you don't journal your trades, ladies and gentlemen? The amount of people, this is something I do with people in the Moneyball training program, is after they, how should I say this? After they have 30 or 40 trades, I review all of their trades, and then we come up with what a winning trade setup has versus a losing trade setup. And we say, okay, your trending trades are 75%, while your counter trends are 40%. Let's remove those counter trend trades. They're not making you money, you're losing money. Okay, what's the arrival like? Your clean arrival is better. You have a 75% win rate. Without it, you have like a 20%. So you need to stop taking poor arrivals. Okay, what about the pivot points? What about the strength of the imbalance? We review like 20, 30 different things, and we come up with what a good setup is versus a bad setup. Okay, and so what's important is that you review to see what makes the most sense to you. After 20 trades, you could potentially look at and to say, if I went for, instead of going for 2 to 1, what happens to my win loss if I went for 1 to 1? Okay, I have a higher win loss, but did I make more money? Okay, what happens if instead of going for 2 to 1, I went for 3 to 1? Yes, I have a smaller win loss, but maybe it's only a 5% difference, but I make, a bunch more money. So maybe it's worth going for that. So when it comes to, trade management, stop loss, or entries, not entries, but take profit and trade management, it really depends. And what's important is that you're consistent and that you at least journal what is happening. Okay? Because if you don't have a very mechanical way of trading, I really recommend mechanical ways of trading for new beginners, because it's going to be less emotions at play, right? Once you get experienced, then you can start playing with, not being very mechanical. Okay. So let's talk about more examples now. That was a fantastic talk that we just had about take profits, entries, and stop loss. You might be thinking, no, you guys, if you guys watch this so far, I know you guys know that was extremely valuable. Okay. But how I like to take profits is I like to get out at opposing zones. So if I got short here on this, I would be getting out at this opposing demand zone. Okay. Because prices are rallying up, coming back into my zone from here. They come up, base, and then rally, gets me filled in my trade, and then drops instantly. So that's where I would be looking to at least manage my trade. I need to get another hard seltzer mango. Give me 1 second. I'm gonna edit the video so you guys don't see me walk away, but we're gonna talk one more trade review, and then we're gonna talk about the one time frame setup and a lot of other stuff. Holidays, I love the holidays, Everybody loves the holidays. If it's not the holidays by the time you're watching this, that's okay. I appreciate a like so far, guys. Hey, can I get a like on this video? I haven't asked for that. I don't ask for much, but I do. It helps me grow the channel, gets this video back out there to more people. So I appreciate if you guys like the video right now. Thanks, guys. So I want to go into a couple trade reviews and talk more about this. Okay, that's a one time frame setup. We're going to talk about the one time frame setup, but it's only going to take 5 minutes. I first want to talk about this trade review. Okay, so US 100. First thing we do, guys, is what? Start off by drawing out our higher time frame supply and demand zones, right? So in here, the US 100 daily time frame, we had a daily demand zone. Once again, guys, look, very important. 2-to-1 imbalance, very strong imbalances to the upside, pushing the trend to the upside. Tradable demand zone, that's a fantastic daily demand zone I want to use. So when prices return into our higher time frame demand zone, depending on the time frame sequence that you're using, what are you doing? You are looking for buying or selling opportunities, okay? So prices return back into our higher time frame supply or demand zone. We go down to a lower time frame, right? We go down to a lower time frame and we look for buying opportunities. Okay, so we look for the confirmation. All right, so in this case, we got lower lows, lower highs, lower lows, lower highs. What do we want to see, guys? We want to wait for the bend at the end. And the bend at the end is going to be the opposing pivot point supply zones being removed and the break in momentum line, right? So yes, that's what we got right here. All right, we have a very strong move to the upside, right? We got this gigantic, very large black candlestick to the upside that removed an opposing supply zone and broke momentum line, right? So that tells me a lot of buyers are stepping in and we have that confirmation, okay? Very strong move to the upside, remove an opposing zone, and that is our demand zone down here, right? Proximal line, distal line. We trade the pullback when prices return back into our proximal line, okay? So we buy the pullback, and I think in this case, 1.5 to 1 take profit. So I'm guessing somewhere up in here is where I'm getting out of my take profit, or somewhere in here. Okay. Price comes straight back into my zone. That's what I want. When I made a video on this, I will pop it on the screen, talking about clean arrivals versus poor arrivals. It's a very important concept that I've actually received a lot of messages from you guys saying it's a huge difference. And when I do my one-on-one reviews with traders in the program, they always come back to me and say clean arrivals are better than poor arrivals. But I will recommend you guys watch that video. I will have it in the description below. But poor arrivals is when prices return into your zone, but before returning into your zone, it creates opposing zones. So a clean arrival would be like this. Like we got that, and then we get prices coming straight back into it. But in this case, notice how we create these opposing supply zones. That's not what I want to see. So that typically cuts your profit margin and it lowers the quality of the overall trade. And statistically, 9 times out of 10, people come back to me and they're like, there's a massive difference between my winners and my losers when it comes to clean arrival versus poor arrival. All right. So in that case, in this demand, we have a price coming back into higher time frame demand, and we have this confirmation break in momentum opposing zone being removed, right? Very strong move to the upside. Once again, a tradable zone. Okay, we're going to talk about a top-down analysis of like a mind map. That's a really good thing I recommend, because I understand I'm throwing a lot at you, but I'm going to break it down for you. Higher time frame. So in this case, another buy setup. What do we got? Oops, blowing it up, eh? I won't say that joke. Every time I use my sniffing tool, I gotta blow this thing up. I always think of a joke, but you guys know I can't say that one here. I can't say that one. But we know what we're talking about. Okay, so higher time frame. In this case, we use the 30-minute on the S&P 500. We draw out our higher time frame demand zone right here. Once again, drop-based rally, 2-to-1 imbalance, removed an opposing zone, right? So it's a tradable zone, strong and balanced. When prices return back into my zone, I want to look for buying opportunities. Prices come back into my higher time frame zone. I then go down to a smaller time frame and I wait for the confirmation. So we got the lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Boom. Okay. We would never trade this as a confirmation. That's definitely not a quality zone. There's no confirmation. It's horrible. All right. We want to see pivot points and breaking momentum lines and stuff like that. Okay. So we got that happening. We got the drop base rally down there. We removed this supply zone. We broke the downward momentum line over here, and we got prices coming straight back into it for a clean arrival, right? So we get filled right here on the pullback, And we have our stop loss down here as a kind of just 50% the size of the zone. Okay. And we get out before this opposing supply zone. Okay. In this case, a 2-to-1. So that's the opposing supply. That's probably going to give me some type of hassle before I get out of my trade. So I want to get out before that area. If you're taking multiple take profits, maybe you want to take your first take profit there, move your second position stop loss to break even. Okay, maybe you want to get out altogether. That's totally fine as well, right? Where would I have my second take profit? Probably right here, in my opinion, right before this opposing area of supply over here to the left, right? That's probably the area where I would be getting at least managing my second positioning to my second take profit. Looks like a 5-to-1 or something like that. We're really running to the bank. Oh my God, I did it again, guys. Look, two dudes at once. Hey, you don't know until you try, I guess, right? So, not for me, but then again, you can't hate it until you try it. But I have a feeling I wouldn't want it. Okay. I gotta be careful what I say on these videos now. So let's talk about this now. I want to talk about the one time frame setup here now as well. Now, the one time frame setup was created from people in the Moneyball trading program coming to me saying, I have these really good zones I want to trade, but I can't trade because it's not located inside a higher time frame supply or demand zone. So we took this idea to say, what if we have a really good lower time frame zone, but it's not inside a higher time frame zone? So then we took this idea to the backtesting tab, like I said, and it turned out to be very good. All right, I've made a couple videos. I will pop all of those videos on the screen. I'll have them all down below talking about the one time frame setup. But that was created because people in the program, an example of this. So we're going to get into a physical example, but let's just imagine, the trend's in a downtrend, right? And that's our higher time frame supply up here. And so what we want to see, is this very short-term movement. All right, trends down on a downtrend on a higher time frame. We go down to our lower time frame. We still get that confirmation break in momentum, opposing zone being removed. That's the zone that we are still trading. It still needs to be qualified as a good zone, but that is still a valid. It's the same setup that we just talked about on the lower time frame, but we don't need to be inside the higher time frame. But we need to be trading with a higher time frame trend. Let's look at one trade review and then one idea. So in this example, so at the time, this was a higher time frame trend direction short. Okay, so we're going to look at one loser and one winner. So in this case, it's the winner. So we look at here on the higher time frame. In this case, it's going down, right? We got lower lows, lower highs. So I definitely want to be looking for selling opportunities. Okay, so we're in a downtrend on the higher time frame, and we go down to our lower time frame. In this case, the 5-minute, and it's the same thing that I need to see. All right, I need to see that same thing of, breaking the momentum line, removing that opposing zone. Okay, so it's normally going to look like this on the lower time frame, like that. That's usually what it's going to look like on a lower time frame. And so that's what we have right here. Higher time frame in a downtrend, this rally-based drop over 2-to-1 imbalance, removed opposing demand, removed opposing demand, removed opposing demand, broke upward momentum line, okay, and we have a very strong quality supply zone up here. And so I get filled once again at the proximal line when prices return back into that area, and then my stop loss goes above there for a structure stop loss. Okay, and it looks like I had my take profit around here, which is fantastic, getting out at a nice 2-to-1. Once again, we already kind of talked about take profit trade management, so I don't need to reiterate everything I did mention. It is time stamped out, so I do recommend going back into that talk where I start talking about trade management, stop loss, and that type of good stuff. Okay, but that's how we would be trading it, and that's the pullback that we would be trading as the one time frame setup. But it's important that you have a proper risk management. Don't go off and risk 10%, then 2%, then 1%, then 25%, right? Remain extremely disciplined. Don't be risking more than 3% per trade, okay? I will never encourage that. I think that's a very stupid thing to do. So do not ever risk more than 3%. So this is fantastic stuff so far. So we did just talk about the multiple time frame and the one time frame setup, how to, TP, entry, stop loss, trade management, risk management. I want to touch up on news and fundamentals because a lot of people blow their account right here. And what I use for my news is I use forexfactory.com, and it's something that you need to be aware of every single day of what news is coming out. Okay, because this week, as I'm recording this, December 13th, the Fed rates is coming out this week. You should not be trading during these times of when major news announcement is about to come out, especially if you are day trading. If you're swing trading like a 4 hour or long-term position using a daily as your entry, I understand news trading is just part of it. You have to be involved in the news. But if you're scalping or trading these lower time frames, you should avoid the news at all costs. Okay, and I say this, but time and time again, people go off and trade it and they lose their account because the market goes the opposite direction. The spread jumps from, 2 points up to 20 points. Price shoots up, stops them out for 5 times. It jumps up 5 times because the market is so volatile. Okay, that's actually a video I made talking about. I will pop it on the screen and actually have it in the description below, talking about what is actually happening in the markets on the level 2 order screen when news announcements is about to be dropped. It's crazy. All the orders get pulled and they're waiting for that news announcement to be dropped. So I do recommend every single day having a look at what news is coming out at what time. But for the mass majority, you need to be aware of what major news announcements is coming out, right? Fed rates, NFP numbers, unemployment, people coming out and speaking, all right? So what I recommend doing is just avoid the news altogether. You are going to get burned sometimes. I understand that. Sometimes you got to touch the hot stove to realize it's hot. Your mom ever turned on the grill? She said, "Don't touch it, it's hot." And you're like, right? And you do that little thing and she freaks out at you, right? But then you do it and then maybe it's just warm, but you hold it there and it gets hot, right? You ever put your hand over the fire pit and a bunch of your friends are sitting around the fire pit. Who can hold their hand over the fire the longest? I don't know. I don't think that's a guy's thing, right? Last person to pull their hand away. um, yeah, but you guys understand what I mean. I recommend avoiding it altogether. The news, okay? How we scan the chart, right? You can always use multiple different time frame sequences. So maybe you want to do weekly 4 hour, but you also want to look at like daily 30-minute or 4 hour 5-minute or scalp. Everybody's different, right? So if you don't have the time to day trade or scalp, then you're probably looking at swing trading. That's fine. Okay. You can always add like the one time frame setup or the multiple time frame setup for more opportunities. You can always add a different time frame sequence, like I just explained, for more opportunities. You can always add more markets to focus on and look for more opportunities, right? But just understand, the more that you add, the more you open yourself to potentially information overload. And you see price here on the daily inside supply, but here it's on the 4 hour in a downtrend. But then you got this 20 other markets you're on your watch list with this time frame in demand, but it's in a downtrend. This time frame's in an uptrend, and it's very overwhelming when you got so many markets on your list. Me personally, I like to focus on 5 or 6 and just focus on those. And statistically, when I do my review, we're going to be talking about journaling and reviewing now. When I do my review, statistically, these markets year after year were my best performers, win rate, making the most money. So that's why I focus on only a select few of markets. All right. It's a lot easier than looking at 30 or 40 different markets. But if you do that, that's okay. Some people I know like to do that and they like to really cherry pick their zones. There's nothing wrong with cherry picking, right? If you have access to a lot of markets, there's nothing wrong with that. You can do that. You should be cherry picking your zones, right? You should be waiting for these high quality price to come back into these high quality zones and trading high quality zones and have high quality setups. You shouldn't be trading C quality setups. You should be trading A quality setups only. Okay, because your A quality setups are the ones making you money, while the B and the C are potentially costing you money. All right, and that's why reviewing your trades is important. Now, how do you review your trades? We've got to talk about journaling. Now, there are a couple journaling softwares out there. This is not where you click off the video. This is an extremely important topic that we need to talk about, and that is, how do you journal? What do you recommend, Austin? How do you journal? Let's talk about that. What you could do if you have Discord, you could open up your own server and just click add server and post a picture of all your trade reviews, right? post a picture. So if we look at this trade from Luke, he's posting this, he's breaking down his whole trader view about why he's getting into his trade or not, right? Why he got long, why he got short, was it a winner, was it a loser? And he's labeling, UK 100, providing notes. Okay, so if you have your own Discord server, you could type in UK 100 multiple time frame MTF short loss, and then you could filter through after 50 trades and type in MTF, and it will pull up all your MTF trades. It will pull up all your 1TF, your one time frame trades. It will pull up all your losing trades. You can type in win, it will pull up all your winning trades, right? And so then you can start breaking down what a quality trade setup is versus a non-quality setup. So what I recommend doing is, after you take a trade, is journal the trade, because that's something that you need to do. And you see me doing it. Let's just look at this one that I just talked about. I can then review to see 6 months from now, I can now go back and say, statistically, how many of my trades, instead of getting out at 2-1, went to 4-1? How many of my trades went to 10-1? Okay, what would have happened if I took multiple take profits? Okay, what's the quality, what's the win-loss difference if I'm, getting a clean arrival versus poor arrival? This is what is required from traders. Not every trade is the exact same, but you need to review to figure out what makes a winning trade setup. Okay, it's something that I do with people in the Moneyball trading program. Is after they have 30 or 40 trades, I sit down with them and we review all of their trades, and we say, I want you, here's 30 things. I want you to look at all your trades, and I want you to identify what your winners have in common versus your losers. Okay? Backtesting is very important, is because it lets you test ideas and review a trading strategy within a short period of time, instead of spending, months trying to get 50 trades or 100 trades. You can quickly backtest something to see, what the stats are of the trading strategy or the setup. Right. And so we always go into the back testing meeting saying, hey guys, let's try this one time frame setup. Or hey, let's try trading the overextended markets when this happens. Right. And so we take these ideas to the back test and we say, hey, it works really well. Let me go off and back test some more. And this is how we create a better edge for ourselves. And this is why it's important to review and back test, because it helps build confidence in your trading strategy, which is huge. Okay. To have confidence in your trading strategy rather than just going off and just like blindly following someone. Because if you go off and take 30, 40 trades, and you take the trades yourself and you see the results saying, definitely this is a winning trade setup versus a losing trade setup. If you're the one taking those trades and you're the one doing the review, you have a night and day different belief than the trader that doesn't do that, right? If you just go off and take my word, you're just going off and taking my word on it, right? But it's like the analogy I give. You go into a haunted house. So the haunted house analogy is, that is a haunted house, right? And let's say you and I are outside the haunted house. There's me and there is you, okay? Now, I believe in ghosts. Let's just say I believe in ghosts. I've never seen a ghost, but I believe that they're ghosts. And I believe that this haunted house is haunted because everybody comes out saying they saw a ghost. And so I already believe subconsciously that, ghosts are real and that house is haunted. But then you go into the haunted house, okay? And I stay outside because I know better. But you don't believe in ghosts. So you go inside the house, and then 5 minutes later, you come running back out, right? And you run past me and you're running down the park screaming, right? I then go up and meet with you and you're like, what happened? And you actually saw a ghost. Like, let's say you actually saw a ghost. You are going to have a different belief system from then on there because you experienced it with your own eyes of you actually saw a ghost, right? Versus me, I'm going to be like, oh my God, like really? That's going to further my belief system that that house is haunted and that ghosts are real, right? Versus you went into that haunted house saying there are no ghosts are not real, and you are coming out 5 minutes later with a completely different belief. That's why it is important to backtest and review for yourself, because you build a different level of confidence than if somebody else just tells you what to do, right? And it doesn't mean that you're going to be a pro just off of following my advice saying this stuff works. You got to see it for your own eyes. And you guys can always reach out to me on social media at Moneyball Austin and reach out for help. So I'm really trying to put everything into this video for you guys. And I want to be talking about something else now at this point. We talk about reviewing, trade journaling. It is important, reviewing, backtesting. It is important to have a trading plan. I would recommend creating your own, but have a very mechanical way of taking a trade. And so something that I do, let me go like this, map, I think it's called. Yeah. So this is something that I did early on, and I just post a picture every once in a while. Because some people like having these maps, okay? And so what's the first thing that we do? Okay, we step one, identify where supply and demand zones are. So that's why I like having a very step-by-step approach, right? It's because it will help you, kind of, because it's so information overload. What are the steps? What are we looking for and all that? So break it down in steps. Step one, what are we doing? Okay, what's a fresh, identify fresh supply and demand zones. Okay, step two, determine what the trend is. Okay, now we go over here. Is price inside higher time frame zone? Okay, no, next trade. Okay, yes, maybe we wait for confirmation. Has price shown confirmation? No. Okay, wait for confirmation, right? And so you're creating this very this mind map, I think it's called, where you're navigating yourself through yes and no questions of what you like to see. Is it a tradable zone? I don't know. What's a tradable zone? Did it remove an opposing zone, break momentum line, 2-to-1 imbalance? Yes, it did. Okay, so it's a tradable zone, right? And so you can follow this around and create your own. And so what I do recommend is at least taking, you should have, depending on your trading strategy, is have at least 3 or 4 trade reviews of what a good short setup is and a good long trade setup is. All right, so when you're about to take a trade, look back at your previous trade reviews to say this is a really good trade. Only take that trade if it lines up with the 3 previous short trades that you've taken or the 3 previous long trades that you've taken. If not, you don't take the trade. It's that simple. It really is that simple. Okay. And that ebook I have been mentioning, that is completely for free. It's kind of highlighting over some of the things that we did talk about here in the video, but you guys can get that at moneyballtrading.com. That will be in the description below. But that is really where I am trying to create consistently profitable traders. All right, that is the whole goal, to do that in 90 days or less. So you guys have been seeing me talk about like the Discord and stuff like that in the program. So what my goal here is to create profitable traders in like 90 days or less in the Moneyball Trading Program. It's a very hands-on experience, just one mentor, me, myself, one community, one trading strategy. And so it's a very hands-on learning environment where we have our, weekly coaching call going over the Sunday weekly watch list, and then our Wednesday trade review meetings going over everybody's trade reviews, what I like and what I don't like, my watch list, my trade reviews, everything and whole course material on what you need to become a profitable trader. It's all in the Moneyball Trading Program. So I would love to have you guys part of that, and it's a really hands-on learning environment, right? And so that's really why people join. It's not for the information, but it's more for the true implementation and the coaching role. I have a lot of great videos on my YouTube, but if you want that true implementation and coaching role of how to properly use it, I would strongly suggest you guys looking to join the program. I do handhold you guys all through. It really is that ongoing coaching role and that true implementation of the trading strategy. So that will all be in the description below for the Moneyball Trading Program or the ebook. If you just wanted that, that's all fine. I would love to have you guys part of the team there. But that is going to end everything there. All right. I appreciate if you guys liked the video. And if you guys want to see more videos, you guys know where to check it out. All right. I'll see you guys later. Cheers. Goodbye.